What will SPY do tomorrow? Well, here are 9 ways to help you figure that out. The stock market generally does not open at the same spot that it closed the day before. So that creates what we refer to as a gap. So how can we take advantage of that? How much of a gap can certainly determine how much you might make in your overnight trade. In a flat open, well, that could be disastrous. So I'll share an indicator that helps me with that issue in a few moments. But first, let's talk about some of those indicators. And here's one statistic that can be very helpful. And that is that the market, on average, tends to open up about 55% of the time and down 45% of the time. One consideration to determine if the market might be up or down the next day is price and volume. Is the price increasing with higher volume or decreasing with higher volume at the end of the day or compared to the previous day or days during the week? Take a look. If you see unusual activity, that could determine if you're going to have an up or down day the following morning. As you may know, many brokerages will allow you to trade 15 minutes after the market closes. And a lot can happen during those 15 minutes, such as economic news or earnings reports or even press releases that can change the mood of the market or individual stocks. So waiting till after the market closes does have some risks, but you can see what the mood of the market is after it closes and make some decisions as to how you think that'll affect the opening the next day. Believe it or not, I have found social media to be helpful in determining how the market might open the next day. Yeah, there are a lot of opinions, but you can take a poll and see what do people think. And believe it or not, I have found that they're often right. Of course, my favorite indicator should come as no surprise to you, and that is the up or down signal at spytomorrow.com, which is available for free at 4 o'clock Eastern Standard Time. It measures the pressure at the end of the trading day, which often correlates to how the market might open the next day. And I have to tell you, the purple algorithm has been doing a pretty good job. The next consideration is news or trends. What's been happening, such as economic reports? What happens after the CPI or PPI report or jobs report as of late? How about earnings? What tends to happen after Apple reports earnings or Google or Tesla? What does the market tend to do? This can help you determine what the market might do the following day. Perhaps you might want to consider what the big money is doing. Are there inflows to SPY or are they pulling money out of SPY? What's the put-call ratio? Is the big money looking ahead thinking the market's going up, or does big money think the market's going down? Of course, there's always technical analysis, and there are many indicators such as the RSI that can show us if the market is overbought or oversold. The only warning there is that it can continue to be overbought and oversold for another few days before there's a correction. Some traders like to use tick. Now, I'm not an expert at using tick. It considers multiple exchanges and how many stocks are going up versus how many are going down at a specific point in time. And sometimes, if you look at tick at the end of the day, it might give you an indication as to how the market might open the next day, kind of similar to the idea of pressure. And another tick that traders will use is the last tick of the day on their chart, whether they're using 1 minute, 3 minute, 5 minute. If the last tick is up, especially with high volume, it could be an up open the next day. If the last tick is down, especially with high volume, well, then tomorrow could be a lower open. So test these indicators out, say, over a month and see which ones work best with your style of trading. It very well may be there's one that works really well, or maybe a combination of, say, 3. The best 2 out of 3 is the direction that you go. But paper trade first. Make sure it's right for you. And the indicator that I use to help determine flat markets is in the members section of spytomorrow.com, and that is the purple max G. If it's 0, I'm always cautious. And I'll see you in the next video.